So first of all, welcome to the last LaingBuisson webinar of the year. This webinar is actually highly relevant in a way because it was also the first webinar that we had during COVID when we launched our childcare report. And therefore this is a really good opportunity to see how COVID has impacted the sector over the last few months. So early education and childcare webinar, we're really delighted to have two sponsors in the form of Cairneagle and Lincoln International, and our media partner is Care Markets. So very quickly, an introduction from me. The panel we've got today, or the series of panels we've got today, are absolutely fascinating because we're able to look at childcare on both sides of the Atlantic, in the US and Canada, in the UK and France, and compare and contrast them. So the running order for today is essentially that Arun Kanwar from Cairneagle will provide a short pandemic market update. And we'll then have a Q&A with Clare Roberts, Fatima Essoufi and Ina Todorova. Then at 3:35, Zack Shah from Lincoln will give a similar market update, but with an international perspective, and then have Q&A with Victoria Sopik and Rudy Gupta. And then at 5:04, Matt Lee will have an in-conversation interview with Dave Goldberg before we wrap up at 5:30. So I think we're going to have some really good insights. What I would encourage people to do is to use the question and answer function on Zoom. We've activated that today. What we find is that if you can be anonymous, and you can opt to be anonymous, people find it often easier to ask questions. So please do, and we can feed those through to the panelists. So just on my side, childcare is a market that LaingBuisson have covered for a number of years. And our market report, as I mentioned, came out in March. I think what I would say about this market report is that this year, with Cairneagle as the authors, it is extremely analytical. And it's really got a quality of analysis that's better than anything we've had before. And the Cairneagle team have been instrumental in keeping on top of the pulse of the industry during COVID, and have written an addendum which really updates the report for what's happened over the last few months. The authors are Arun, who's the partner, who will speak in a moment, who has been active in the sector for many years, starting out in the sector with Bright Horizons before moving into strategy consulting. But it was also the broader Cairneagle team that helped to write it. So Ina Todorova in particular, who will be joining Arun in a moment to give the market introduction. So I think on that, it gives me enormous pleasure to welcome Arun and Ina to give the pandemic market update. So Arun, over to you.
Thank you, Henry. Good afternoon. We're excited to be talking today about the childcare market and really discussing with my esteemed panelists, Fatima Essoufi, the Global Head of M&A at La Maison Bleue, and Clare Roberts, CEO of KidsPlanet. I'll be joined now by my colleague, Ina Todorova, who worked with me on authoring the report. So just a very quick overview of Cairneagle. We're a strategy consulting firm which focuses on the education space. We're very passionate about childcare and have been involved in many of the transactions in the childcare space in the UK and beyond over the last 5 years. We authored the 16th edition of the childcare report, as Henry mentioned, and I think it's just worth saying that at the time that we wrote the report, which we finished drafting in mid-February, we couldn't have imagined quite how COVID might unfold and how it might bring the entire world to a standstill. I think we flippantly said in the report, this doesn't account for the impact of COVID, not really realizing what a black swan event it would become. So in this short update today, we just want to provide an overview of the impact of COVID-19, what it means for the UK childcare space. And I think it's just worth saying that whilst a lot has changed since we wrote the report, a lot hasn't at the same time. We believe the fundamentals of the sector still remain compelling and investable, and nurseries have arguably maneuvered the crisis better than other parts of the economy. Henry, if we could turn to the first slide. Fantastic, thank you very much. So overall, despite the challenges, we think nurseries have done relatively well. Clearly, the troubles began at the beginning of the first lockdown on the 23rd of March. Ironically, it was the date of the launch of this report and the date of the first webinar that we did in the childcare space regarding the report. And nurseries were closed to all but the children of key workers and to vulnerable children. And look, I think despite these challenges, a number of measures were rolled out which really supported the sector. Those included the furlough scheme, continued 15 and 13-hour funding for 3-year-olds and 2-year-olds for 15 hours at spring term levels, and business rates relief. And that really stopped a cliff edge, stopped a lot of providers coming out of the market. And thus in many ways, the sector's been more supported than other sectors. And also at the same time, the sector came together in a really unprecedented way. In March, as the situation became graver and more concerning, over 80 leading groups banded together to form a COVID crisis working group, which really allowed connectivity between operators and helped them to liaise more closely with the membership and lobbying groups to allow more direct feedback of their concerns and direct feed in. And in early May, a subgroup of this working group put together some site operating procedures which were presented and circulated, which were intended to support providers in putting precautionary measures into place, which arguably helped the sector to convince government to allow nurseries to open earlier than schools and to really direct the debate around safe operating procedures rather than being dictated to, and perhaps ended up being less onerous than in terms of the rules than in some other countries. I think what's most important is, as the sector reopened from June and has continued to grow, the government has stayed very committed to keeping nurseries open. And during the second lockdown, despite some of the protests of the National Education Union, nurseries were kept open alongside education institutions. The government really realized the importance of childcare, not only for the outcomes for children, but also in helping parents to get back to work. On to the next slide, please, Henry. Wonderful, thank you. So we're just going to have a quick chat about how performance has been in that regard. So really through April and May, occupancy was very low. Nurseries were really only open for the children of key workers and those vulnerable children. So it was held back. Some nurseries stayed open during that period, many did, and a number stayed closed until June, where nurseries were really allowed to open. And after this very difficult period, we started to see a slow recovery with a most marked increase following a September reopening of schools. Many parents were really holding off until then. So the chart on the left-hand side here is kind of surveys run by CEDA looking at overall occupancy levels. And that said, occupancies are still lagging the previous year. We've undertaken a survey of leading groups in the education space with over 30 responses, spoken to many of the large groups. Average occupancy today or at the end of November is about 85 to 90% of last year's, with significant variance, some lagging as more than 20% behind last year, and some actually ahead of last year. And there are nurseries which are exceeding historic levels, partly because of where they are or their competitive positions. Generally, nurseries in residential areas with professionals still working have fared better, but areas where the economy is reliant on traditional retail, tourism, hospitality have been hit hardest. Generally, but not universally, London and the Southeast have been better off. Henry, if you could just turn to the next slide for a second. And destination and workplace nurseries have also been struggling more. I think it's worth saying there are a number of very specific factors which impact how nurseries are doing over and above that, around competitive position, quality, approach to staffing, approach to customers, proximity to schools, whether or not people can use their grandparents. Arguably, that's been harder in London than it has been elsewhere because of the nuclear families. What's been going on with local supply, a whole variety of factors, which lead to this variety of performance. So on to the next slide. I'm now going to pass over to my colleague Ina, who will just discuss kind of what some of the operators are thinking about how they see the future outlook for themselves.
Thank you, Arun. So that all being said, there is optimism with most operators we have spoken to expecting to recover in 2021, which is actually in contrast to some of the rhetoric about closures. So in late October, a survey by the Early ES Alliance showed that overall 1 in 6 providers said they could close by Christmas, and just over half they said they would require emergency funding to stay open in the next 6 months. However, it's worth saying that that was before the extension of the furlough scheme. And it's also worth saying that the level of distress is more heavily weighted to nurseries in areas of deprivation. From our conversations, nurseries that rely heavily on funded children have also been challenged more. And that's due to a combination of socioeconomics having a high weighting to parents who are at risk of losing their jobs, but also the lack of availability of after-school clubs. And therefore, the thesis in most investors in the UK has been that of the professional private parent pay, and that appears to be here to stay and fundamentally investable. And that's despite the initial wobble when nurseries are closed in April and May. And there is another important factor, and that'll be where demand is expected to be. So in early lockdown, Bright Horizons undertook a survey of 1,500 parents, and 70% of them didn't want to go back to their old ways of working, with the vast majority wanting some work from home. And in support of that, only 5% wanted to fully return to their old ways of working. And as such, we expect demand to move closer to home, creating also the need for more flexibility and, for example, shorter hours. And in respect to that, regional differences should not be overlooked, with London and the Southeast being the least hard hit economically and also expected to recover more quickly. And thank you. I'd like to pass back to Arun, who is going to address some issues of profitability in more details.
Thanks, Ina. Yeah, I think revenues are only part of the issue. It's worth saying that profitability has been impacted and will be impacted beyond kind of the revenue equation for some time to come. As part of the same survey, we asked operators about some of their other issues, and the biggest issues identified were staff self-isolating, loss of revenue from children isolating rather than not being enrolled within the nursery, and managing protective bubbles. And those costs are going to be there, those challenges are going to be there as long as these challenges around self-isolation and the virus remain. That said, there are a couple of unexpected side effects or glimmers of hope. As many of you will be aware, staffing has been a real challenge in the childcare space, and we've written at length about this, but long-term staffing may be easier, as you won't necessarily have the alternative jobs to go to with the distress in the overall economy. You'll have seen the latest news about Arcadia and Debenhams, which could be the tip of the iceberg. In the survey that we undertook, about 40% of respondents said that qualified staff recruitment is now easier. 60% that said that unqualified staff recruitment is easier. And closures, of which there will be some inevitably, may help nurseries which survive to be fuller. In the same survey, about 40% of respondents said that they'd seen competition close, and about half of those said that they'd benefited from that. So I think we believe fundamentally that the thesis for childcare is still very strong, especially in the backdrop of the optimism that we've just talked about in terms of recovery. Essentially, the fundamentals that we're showing on this page are the same as the ones that we had before and haven't really changed. Nurseries have really moved from childcare only to really being social infrastructure. We moved to having a joint approach of supporting children in their early years and supporting working parents. And from an investor perspective, there's a fragmented market to consolidate and a really good group investment thesis. I think most importantly, we believe that the UK market's in a really good sweet spot. It's got the combination of downside protection from having a funded model, guaranteed 15 hours for every child over 3, 15 hours for the 40% most deprived 2-year-olds, and 30 hours for most parents of 3-year-olds, but yet the ability to have for-profit operators and to set fees. When we look across the world, we'll probably have an interesting discussion about France and other countries in a second. We see that often only one of those levers exists at a time, but in the UK, you've got both of those levers, which I think is a great combination of downside protection and ability to make margins. So coming on to the last slide that we, if you could move to the next slide, Henry. We just thought we'd talk about what we're seeing in terms of M&A activity. And look, there are really good green shoots of activity in terms of M&A. We've seen activity already. There have been transactions. We've shown some of the players in the top left. So for example, Sun Hill Daycare being bought by the Old Station Nursery, Head Start being bought by Little Garden, My Family First. 2 operators continuing to grow and become large operators in My Child and Welcome Nurseries, and a step ahead being invested in by Ann Capital. And we're aware that there are a number of other transactions in progress. Our operator survey indicates a good appetite. A significant proportion have indicated, just under half have indicated that they're planning on expansion next year. So just to close off, we thought we'd just talk about the multiples debate. We've talked about this a lot before. We talked about whether or not multiples had maxed out. There's been a lot of debate about the opportunity to buy high quality businesses at distressed multiples. I think in a normal market, there would probably be quite a lot of distress, but a lot of the distress has been put off by the government levels of support, both for the childcare space, but for other sectors. And arguably the distress that has happened so far has been really around lower quality businesses that were already struggling, at least in the initial periods of lockdown. Much less distress has happened at the larger group or PE invested level, and many of those businesses will hold off selling until they believe that they can really get their worth. That's what we believe anyway. What is for sure though is that there's been the last nail in the coffin of mid-teens multiples on future run rates. Some of the things that happened over 16 and 17. So I think in order to be creative, sellers will still want good prices, and they'll perhaps be a need to be creative. For example, earnouts, run rate based on most recent recovery. And we're already seeing some of this. So that really just concludes our COVID update. And I'd love to really move on to my panelists now, have a discussion with them. Claire and Fatima, it would be great if you could do an introduction. Perhaps Fatima, starting with you.
Hi everyone, thank you for the introduction, Arun. I'm Fatima Essoufi. I'm head of mergers and acquisitions for La Maison Bleue. As Arun said, a European group of nurseries. So we are initially a French group, but we have expanded over 4 countries. We operate over 400 nurseries in France, Switzerland, Luxembourg, and the UK, where we operate 30 nurseries.
Thanks, Fatima.
I'm Clare Roberts. I'm Chief Executive of KidsPlanet Nursery Group. We operate 52 nurseries across the North, West and the Midlands, and 15 before and after school clubs. I founded the group in September 2008. And we took investment from Business Growth Fund in August 2016, which has enabled us to rapidly grow from where we were then.
Thank you, Claire. Now, I think based on kind of the presentation, there'll be some things you agree with and which resonate with you, but then you'll also have had different experiences. So it would be great to get your experience of COVID, enrollment, operational, how well supported you felt by the government, any other things that you think are really key. Perhaps we could start with you, Claire.
Yeah, so I think obviously COVID's taken us all by surprise, to say the least. And we've been faced with decisions that we've all had to make on our feet that we never would have imagined that we would have had to do. I think the government on the whole, obviously they had no rule book for this either. So whilst we can be very quick to criticise, I think particularly in the UK, we have to be thankful, because things like furlough being announced so quickly has enabled everyone to continue to a certain degree. But I think it has been an incredibly trying situation. I laugh with colleagues at work now and say, we have no idea what we will do when this is over, because it's all we ever talk about and it's dominated our time for the last 9 months. But I think for us, we've been able to do a lot of things internally that actually have benefited us as a group. We did quite a large acquisition in January, and for us, it's given us the time to embed that and integrate properly.
Thanks, Claire. And yeah, obviously the Northwest has had a number of kind of tearings and challenges around the economy. How have you maneuvered through that, and how do you think other operators have maneuvered through that in the Northwest and the other regions that you operate in?
So I think to start with, really, with the first wave, we hadn't really experienced any positive confirmed cases in the first wave. So I would say that the second wave for us in the Northwest has been a bit like a tsunami, where it's just got bigger and bigger, and now it's actually petering off again. I think it's been challenging, and the tiers have been challenging, and as you said, different local authorities or regions are in different tiers, and you have people working in one and living in another. But on the whole, pretty much it's not been that different. So I think it's been challenging, but I think as groups in the North and groups across the whole of the UK, we've all worked together and have found ways through it, really.
Thank you, Claire. And Fatima, it'd be great to get perspectives from you, perhaps starting with the UK and the ever-expanding Old Station Nursery Group, but I think also your perspectives across the world in France.
Of course, with pleasure. I completely agree with what Claire has said. I think no one expected that COVID would head toward with the intention that we've had during the recent months. But again, the beauty of having operations in different countries is to be able to see what happens in these countries and how different it can be with regards to the government support. I think what we have seen in terms of enrollment as a common feature is that when the lockdown was lifted, parents needed to be reassured as to the safety of their children before going back to nurseries. But having said that, we have seen different patterns in the countries which are mainly related to the weight of public funding in the nursery, in contributing to nurseries fees. So the countries where we have a high proportion of public funding, namely France and Luxembourg for us. In France, we have almost 2/3 of our revenues which come from the government, from the public funding. In Luxembourg, it's almost 80%. In these countries, we have seen a quicker recovery compared to the other countries. We are almost back to pre-COVID levels. In France, actually, we are back to pre-COVID levels, and it's going the same way in Luxembourg. So the same applies to Luxembourg. In the other countries, namely Switzerland and the UK, where we have less public funding, even if the public funding has helped, we have seen, I think, a shift in parents' demand, mainly related to 3 aspects. The first one, as you've said, Arun, is the location. Parents are more inclined now to register for nurseries which are closer to home as opposed to closer to the office before. We have seen different patterns in parents' bookings across the week. So the number of sessions booked by parents can be the same, but having with the different pattern of consumption across the week. And we've had some terminations in cases where parents lost their jobs or they were at risk of losing their jobs. And this has mainly affected low and middle income families. But all in all, as Claire said, I think we have all been criticizing the different government decisions, but we are all, I think, grateful to the support that we have seen from the different governments in the different countries. And I think if we want to look at the positive aspects of this crisis, if anything, it shows how the nurseries are a really important sector and an essential sector. It's not only glorified nannies, it's an important sector that contributes to the economy. In terms of operation, I think it's fair to say that it was almost easier during the lockdown period because the nurseries were closed and we didn't have to face the challenges of operating nurseries with the COVID restrictions between the bubbles, not being able to do show rounds and so on and so forth. But all this has now become the new normal and we've eventually had to adapt to it. And this is what we do in our business, I guess.
Thanks, Fatima. That's very insightful. I've got a quick question for you, Claire, from some of our audience today, which is, what's your view on the impact of flexible working on your nurseries? For example, have you seen parents communicate that they want to shift demand and want more flexible timing or pricing?
No, not really with flexible shifts. I think actually what I think lockdown has shown a lot of people is that it's impossible to work at home with young children. I have 3 school-age children and I personally found it very challenging. And anyone who has children that are nursery age, you cannot do your job and care for your children at the same time. And so I think actually parents have returned to their normal patterns. I think what possibly is different is we may start to see a change of where people don't return to offices, where they might look for childcare closer to home if that's what suits them. But it would depend. It depends on settings. We have always allowed people to do shift patterns if we had the availability to do so. Obviously, where you get settings that are 100% full, it's impossible to do that because you need that space to be guaranteed, really. And in terms of pricing, we've increased our prices as we would do normally annually, because obviously our overheads and the living wage and all the rest of it have increased as well. And we didn't charge fees to anyone who didn't attend from April to the end of August. So obviously that's been a loss of income. So, but on the whole for us, our experience has been that the majority of people have returned. Our percentages aren't as high as they were pre-COVID, but I think it's interesting what Fatima said. What we're seeing is that actually it's the areas where there's high numbers of funded only places that for some reason those numbers seem to have been slower to recover. So with 2 or 3 or 4 year funded only places, that's where there's definitely a much less take up of places. But I think one of the things that is down to is the fact things like SEND support, social care, that access isn't being had with families. So families aren't necessarily being signposted in the same way that they would do normally. But I think obviously we hope that will recover as the virus disappears.
Yeah, we've had a couple of conversations to try and unpick this kind of apparent paradox where you've got the part of the market that seems most affected is funded only. I think one of the factors that is coming out is kind of the job losses that have happened have been in a socioeconomic that has been more concentrated on people who would take funded only places. And so they're making different decisions to a certain extent, and perhaps kind of the loss of after school clubs as well for a period of time has kind of really hurt that as well. That's clearly not uniform, but has been certainly one of the factors that's been discussed with us.
I think for us though, our funded only places where they are funded only places is in 15 hours, there's no cost attached to that to parents. So they'd still be able to have that place, whether or not they'd lost their work or not. So I think to an element, some of it is fear and risk about COVID and about the risk of putting their families when they might not need to. I think we've seen a bigger impact, a bigger improvement in the coming spring term for January to March with the funded only numbers starting to come back. But I think there were a lot of, we did appointment-based open days at the end of November because we decided that was the best way in order to get some families into settings who wanted to have a show round. And one of the things that we found was there were many people who've had their first children, for example, that have hardly left the house. So their risk and fear is very different to what lots of other people might have, where they've got older children coming in and out of school each day. And so I think we will start to see a bigger improvement from January onwards in terms of the numbers, as people feel that the risk is maybe dying down slightly.
That's really helpful. Thank you.
If I can add something, I think the question of funded children in the UK is really interesting. And by comparison to France, for example, I think it's also related to the fact that parents would know or not that they are entitled to this public funding. And as you've said, Claire, the fact that there's less social work now means that some parents do not know even that they are entitled to the public funding. Whereas if I compare to France, for example, where it's common knowledge that all parents are allowed to public funding, helps with nurseries going back to pre-COVID levels.
Thank you. So I'm conscious we've only got a few minutes. I'll move on to kind of another theme. Thinking about kind of I'll probably put these two together. What do you think in terms of the future outlook? When do you expect full recovery yourselves, to the extent that you haven't had full recovery so far? And what are your plans for continued growth? What does it look like in terms of M&A versus new build versus just growing organically? Fatima, perhaps starting with you this time.
I think in terms of recovery, as I've said, in France, we are back to pre-COVID levels. In the other Luxembourg is always in the same situation. In Switzerland and the UK, we fairly believe that we will be back. There will be this recovery in 2021, even if we think that we will have different demand from parents. But we believe that if you have strong business fundamentals, there's no reason that you can go back to pre-COVID levels in 2021. As Claire said, we know that parents will still need childcare solutions anyway, even if working from home is something that is generalized across the countries. In terms of future planned growth, we still have the same expansion plans. I wouldn't say that now we would want to do more acquisitions, because we have always been focused on businesses with good fundamentals and strong fundamentals. We have seen lots and lots of, unfortunately, lots of groups which came to the market, which were more distressed assets, and we would, before COVID, we would not go for these kinds of groups or assets unless we would think that there is something really good that we can do with these assets. And we still have the same approach. So our expansion plans are still the same, but in the UK, we believe there is a huge potential to continue increasing the size of our business.
Thanks, Fatima. And Claire?
Well, our expansion plans are still the same as what they were pre-COVID. We're currently sit at 52 settings. We'll have another 10 in the next 9 months. We're invested in by Business Growth Fund. They invested in us in August 2016. So in the next 18 months, we'll be raising investment again. And I believe we'll double in size from where we are now in the next 2 to 3 years. I think particularly for us, what we're actively doing at the moment is moving further south, and that will be our strategy as we move forward. But obviously still maintaining the quality that we've built up, which has been our USP as we've grown.
Interesting. And you've had a really strong KidsPlanet brand across all of your nurseries. Obviously you've got Kids Aloud as well. Would you, and it's been very successful. We often talk about the success of the KidsPlanet brand, and not everyone has been successful with a national brand. Would you intend to have that brand across the South as well?
Yes. So Kids Aloud is different, and probably it's my weak spot because I live in the Northwest, so I knew Jenny very well and knew the brand Kids Aloud very well. So it's the only brand that we've not integrated into KidsPlanet, but I think that's because everyone knows the brand Kids Aloud and we feel it has a real strength alongside our brand. But no, our USP has always been that quality element, and I'm quite happy to stand by that and have all our settings called KidsPlanet, because our aim is for them all to be outstanding, and that's what we continue to strive to do. And I actually think it gives you a real strength for us. We have so much movement as parents relocate in different pockets, and they like that familiarity of the brand. So for us, it's been a real strength that we've always kept.
Thank you very much. So I think we probably only got time for one more question. And just looking at some of the questions that have come through, apologies to anyone whose questions we can't answer today, but here's one question, I think, for both you, Claire, and you, Fatima, which is just to say, clearly costs are higher due to bubbling restrictions and staffing. How much more is that eating into margin on a run rate basis? And kind of when do you expect that to start easing off?
Well, one of the things that we've done is we're a main provider for apprentices. So you could see that staffing was going to become a fundamental problem quite early on in this. So we have increased the number of apprentices across the business by about 150. And we've done that having these apprentices currently supernumerary, but they give you a buffer and enable you to use only your homegrown staff rather than having to use agency staff, because we've never done that. I have a feeling that whilst things will get better, we've still got another bad time to come between January and March. And as everyone knows in nurseries, the challenges in terms of staffing always hits us from about March onwards. As the occupancy starts to peak for March, April, May, June, staffing often becomes more difficult. I think what was said earlier is definitely true. There are more staff, there are more people available for positions. But for us, because of the bubbles and because of having to have extra members of staff to cover that and maintain that, we felt that having our own apprentices was the right road to go down, which is what we've done.
Brilliant, thank you. Finally to you, Fatima.
I completely agree with all what you have said, Claire. At our group, we are more trying to adjust to what we have in nurseries. But as Sarah, our CEO in the UK, would always say, you cannot just sack people because you have lower occupancy rates, especially during these times. So what we are trying to do is to plan ahead what we expect to have in the coming months and adjust to the extent possible, but not. It doesn't mean that you need to send all staff back home. So adjusting, but also bear in mind that we expect recovery in the coming months. So trying to juggle between common business sense and also the social aspects of this.
Thank you. I think that's all we have time for. Thank you very much to you both, and I'll pass back over to Henry.
Thank you very much indeed, Arun. And that was really interesting because you're already starting to see some significant differences between geographies, between France and Luxembourg compared to the UK and Switzerland. And our next panel is very much an international one with the US and Canada. And it'll be fascinating to see where that variability exists on the other side of the Atlantic as well, and how they have been impacted so far. So it gives me enormous pleasure actually to welcome Zack Shah. He's a managing director and head of education services at Lincoln International based out of Chicago. So Zack, over to you.
Terrific, thanks, Henry. Welcome to the international panel. Welcome to the national panel. My name is Zack Shah, and I head up Lincoln International's global education services investment banking efforts. I'm based out of Chicago, and along with our network of 600 colleagues across 21 cities and 16 countries. And domestically in the UK, we cover the nursery sector with my partner, Matthew Lee. You will have shortly the benefit of meeting in the next session. Over the last decade, I've had the good fortune of being involved with nursery transactions on both sides of the pond. And I'm delighted to introduce you to our panelists who I've got to know well in my journeys. Victoria Sopik, she's the CEO of Kids and Company, Canada's largest private childcare education platform with a strong B2B business. And Rudy Gupta, he's CEO of Kido Schools, a very innovative, multi-domestic, tech-enabled platform where the sun never sets on his business, and he'll tell you more about that. Format-wise, I will start by requesting my panelists to introduce themselves and then tell us a little bit about the businesses. So let's do that first. And let's start with you, Victoria. You're on mute.
There we go. Sorry, thank you. Hi, thanks, Zack. So Victoria Sopik, CEO of Kids and Company. We're located, head offices in Toronto, Ontario, Canada. We have about 120 schools across Canada, as well as in Boston, outside of Massachusetts, outside of Boston, greater area, and in Chicago land about 13. So just those two sort of center groups in the US, and then across Canada, coast to coast. We do what we call corporate childcare. So our childcares are typically not open to the public. We're only open to our corporate clients, of whom we have hundreds. You know, a good example would be Ernst & Young, or banks, law firms, all the accounting firms that you know, and we provide guaranteed childcare. So that means we don't have waiting lists. We just a guaranteed space for them for full-time, part-time, or backup childcare.
Terrific. Thanks, Victoria.
Thank you. Of course.
Rudy.
Thanks, Zack. I'm Rudy Gupta. I'm the founder and CEO of Kido. We are an international platform in the early years. We operate 26 nurseries across Hong Kong, Dubai, India, the UK, as well as the United States. We've recently launched our virtual preschool across 4 of our markets in the United States, in the Middle East, as well as in India for children between the ages of 2 to 6. That's 1.5 to 2 hours a day virtual preschool for children anywhere on an interactive platform, which is doing quite well. And more recently, a couple of months ago, we've launched a platform that enables teachers in India to run micro preschools from their homes. We started the first 50 or so of those in the last week, actually, and we're adding more. So, and I'm based in London.
Perfect, Rudy, thanks for that. I think we're gonna, Henry, ask you to put up our slides and we'll go through that and share some perspectives. Given how engaged this audience has been, I think we're gonna be very short, but as Arun dazzled you with data and analytics, we're gonna try to dazzle you with perspectives. So with that said, let's, if Henry, perfect, terrific. So not to belabor the point, but I think it's important to step back and see what the global early education sector, I would say, thesis is. And that the good news is that has largely been unchanged because of current events. When we looked at the global financial, when we look at going back in history to the global financial crisis, at the time, the general sense was the business was mostly around childcare. It was focused on doubling income parents and serving those demographics and providing custodial function to these children so that parents can go to work. Post the global financial crisis, one of the first things that I think started to percolate was a focus on education and high quality early education on the backs of some very strong validation from long-term research that came out of the Perry Preschool Project here in the US. There was a strong interest from the Obama administration at the time, as well as from other business leaders around the importance of early education. And that, I would say, started to catalyze another, I would say, interest in the sector from global investors, which led to, again, to serve changing from a childcare center to being a school. That requires quite a bit of a frame change in terms of from an operation standpoint. And that's where professionalization of the industry we started to see. And next, of course, we had the benefit of some very strong private equity investors who saw the opportunity from the catalyst of, because you can have a lot of fragmented sectors, but you need a catalyst for consolidation. And we saw that consolidation catalyst with early education and childcare, and that has led to a lot of interest for M&A, and we can go through all sorts of data to show you all the deals that have happened over the last decade on that front. So if we can go to the next slide, please, Henry. Other things that have happened more recently, and especially around, on the margins, there's a focus more on learning and enrichment, et cetera. Some of that's happening at the center, some of it is happening at home. But I would say with COVID, which is a topic of discussion here, we have seen a renewed interest in at-home services, a renewed interest in content delivery at home, teaching at home, working from home. And so that's certainly been a big catalyst. The other part of it that I think is notable, which I'd love to get some more perspectives from our panelists on, is the role of government subsidies. I think as many of the audience can can attest to the fact that I think government support in Europe, many European countries, has been very helpful to the sector. Unfortunately, we have not had a similar safety net, if you may, in the US. So I think the US providers in some instances have been hit a lot more harder during the shutdown and lockdown than their peers in the UK and Europe. So the question that we might ask is, will COVID-19 be the big black swan event for early childcare education? We don't know. We don't have all the answers to it, but all we can share our insights and perspectives. The one thing that we will say is, I think, in addition to childcare and education, I think there's a big spotlight on convenience and flexibility. That is absolutely a necessity. It's no longer simply an option. And we're calling it, or I'm calling it, the Amazon effect. I have checked online this morning. I didn't see anybody else use that term. So perhaps I could copyright it. But it's the Amazon plus the Zoom effect, where I think everything everywhere is what the consumer is demanding. And they're going to demand that for childcare education is my sense. Maybe not immediately, but certainly over the next few years. And I'd like to get the perspective of our panelists on that. So in the interest of doing that sooner, I'm going to ask Henry to move us to the next slide here. And what does all this mean from a global early education M&A standpoint? So on the left-hand side of the page over here, what we have are some very near-term macro factors. Some of them are positive, some of them not so much. So the positive is that certainly from a long-term thesis perspective, that's great. That's not really changing. The fundamentals in this sector are strong. They will remain strong. There's a long runway ahead. Consolidation is probably delayed, but unlikely to subside. The vaccine approvals is great. So we can start thinking about a post-COVID world, which we couldn't do just 2 weeks ago or even a week ago. We're starting to see reopening of schools, but we're also seeing some financial distress of some mom and pops, which might lead to some closures or which might impact supply or create opportunities for platforms with staying power to take advantage of those. On the negative side, and again, this is from the perspective of the sector, not necessarily from an individual. Timing and logistics of the vaccine distribution. Certainly, I think it's going to be jurisdiction by jurisdiction, and it's going to take some time. And we don't know how exactly it's going to pan out, but that's going to have some impacts on this sector that might continue. We're going to continue to see some headline risk or headline news around increases during winter. We'll have to watch the patterns of shutdowns and reopenings in different jurisdictions. We might have to consider some impacts on funding in certain jurisdictions that we've had to rely upon in certain countries for government support. And coming out of it, I think 2021 is likely going to be, as Arun alluded to, probably a transition year where we'll see some uneven occupancy levels. We might see some unit economics impact of lower occupancy, higher costs, less operating leverage, and perhaps limited ability for fee increases. And what does all of that mean? I think from an M&A standpoint, near term, we think there will be some activity. We think it might be perhaps some unfortunately distressed situations that people might take advantage of. Perhaps there might be some strategic mergers where you have two groups coming together. There might be, as Arun alluded to, there might be sellers who are comfortable with a disproportionate contingent consideration, i.e. an earn-out of some sorts. I think we'll see some of that. And I think we're going to see a lot more of some next generation tech-enabled hybrid concepts. I think we're going to see a lot more focus on that in some experiments along those lines. Based on prior economic cycles, I think the M&A is likely going to be delayed, especially for high quality assets. We don't get the sense they will be in a hurry to sell. We think there might be limited impact on market multiples for high quality assets, but again, we'll have to see on a case-by-case basis what their individual right to win is. And on an overall basis, I would say platform transactions like we saw in the previous years are likely delayed to late 2021, perhaps even early 2022 at best. And some areas might recover sooner than perhaps others. For example, the European deal recovery might be sooner than the US. From a big enterprise vision standpoint, global investors, I think they will be keen to look at businesses and business models that are a little bit more future-proofed. I think diversification and resiliency are a key test beyond just growth. And frankly, as we look broadly across the marketplace, there is more and more acceptance of tech-enabled hybrid models across various, even adjacent markets. We look at education, certainly in online hybrid learning, that's become the de facto in higher education, for example. In healthcare, my colleague Matt Lee had worked on a telehealth deal very successfully recently. And on retail, certainly we see what's happening with Amazon and how successful they've been, both local and online. So with that, which I did a bit in a hurry, I'd like to ask Henry to allow us to go back to our panel and get some of their perspectives and reactions to some of what I've just shared. So maybe I'll start here, Rudy, with you. And since there was a question asked around technology, and we've also talked about, nobody should really waste a good crisis. And I think there's folks who've taken advantage of that. So Rudy, what can you tell us about what you've done and seen in your business from a technology standpoint, not only to manage your own business on the brick and mortar side, but also to build out a tech-enabled solution?
Thanks, Zach. Thanks, everyone. So we look at technology really from two perspectives. Well, one perspective, and the main thing is technology needs to enable the provision of high quality learning for children. And what we have done over the last few months is, on the one hand, to create a platform that allows children to engage in live preschool education. It's via Zoom-like platform, but with touchscreen interactivity and gamification. So that enables a 3-year-old, for example, to stay engaged for 1.5 to 2 hours, which pre-COVID we thought was impossible, but it works. And that has enabled a lot of children who did not have access to good preschools, even before COVID, in places like India and places like Saudi, even in the United States, to get access to high quality teachers from around the world, high quality curriculum, and high quality teaching. And it's allowed us to get real-time data on learning outcomes and how children are faring in those classes. On the other hand, we have also used the technology that is now ubiquitous to create a platform that allows any teacher to start preschool in their home. So we do the training online, we deliver the curriculum online to the teachers. It's linked with videos on how they need to deliver it. They provide feedback on the children via bot-based technology that we've created, and we can generate reports. We launched that a couple of months ago in India. We've had more than 10,000 inquiries from teachers who want to start up their own pods at home, and a lot of them have gone through training and they're starting their own pods. In our schools, even pre-COVID, we've been using technology more as a tool to really reduce the time spent by teachers on admin tasks and the time spent by administration, and to improve the overall quality. So we have an app-based quality control system that enables me, for example, to see real-time quality control data across some 3,500 data points across all of our nurseries around the world. It enables us to ensure that we are compliant with regulations at all points in time across our different countries. And of course, we use the standard technology to communicate with the parents, to get observations and assessments out. We've used it to disseminate our curriculum to all our teachers for training and so on. So it's really been around enabling the provision of high quality early years across all settings, whether it's in our schools, whether it's in the child's home, or whether it's in their neighborhood.
Terrific. Rudy, thanks for that. We'll put a placeholder on other technology related questions that I'm seeing a few more of them. Victoria, if we could, I think it'd be interesting to hear your perspective on government support and how it's been effective or not effective in some of the jurisdictions that you serve, like in Canada, in the various provinces.
Yes, we've been very fortunate in Canada. We've had a tremendous amount of government support. So it's been federal with regard to, can you hear me okay? Yeah, okay. It's been federal with regard to our leases, so support on our occupancy costs. It's been federal with our wages. So we have something called Canadian Emergency Wage Subsidy, which has given us 75% of all of our wages since COVID started back from the government. So they reimburse us for 75% of all total wages that we pay out. So it's very significant, obviously. So combined with that, we also have received provincial funding and local regional funding. And so we've been very fortunate because, as you can imagine, businesses are closing down in Canada, left, right, and center in terms of, retail, restaurants, hair salons. So many different businesses are closing because they've had the support in terms of the wages that I mentioned and occupancy. So those are both really significant, but they haven't had the other bit of support to cover off other outstanding costs. So I think, it's what is proven to us, obviously, is that childcare really is an essential service, according to our Canadian government, and they don't want to see us impacted, i.e. closing down or not offering high quality care, either throughout COVID or after the recovery period starts. So, from our perspective of our shareholders, they're thrilled because they feel that they have, a pandemic-proof business, which is unusual.
That's perfect, Victoria. Thanks very much for that. I'm going to switch back to Rudy. There's a couple of questions that came up here. One of them is related to the efficacy of online learning. I think there's been some noise around K-12 students and their inability to properly learn in that format. What's been your experience, albeit a little bit limited, in terms of the impact of that in a positive way? And also, what is the earliest age at which you start to serve these your kids?
So I'll take the second one first. So we start at the age of 2, though in India, we've had a lot of parents asking us for live online classes from 18 months on. In terms of the efficacy of online learning, live online learning for children at a preschool age, really it's about the platform and the interactivity. So if you do a 1.5-hour Zoom session with a 3-year-old, you're not going to get much beyond 5 minutes, I think is probably the limit. But if you can gamify it, if there's song and dance going on, the technology we use is interactive on a touch screen. So it's like a child is dragging and dropping a puzzle, and for them, it's like they're playing with the technology, almost like an app, except there's a live teacher present that can see all the children. It is in a group setting. So we have created a virtual classroom, and there we find that attention spans, say for a 3-year-old, start at about 15-20 minutes, and then you've got to sort of change. And then after about a couple of weeks, it's more than an hour, and it's not a problem. I think a related question was, in terms of the learning objectives, we find that it's actually better than perhaps even in-person class for things like literacy and maths, because the child can learn at their own pace in the gamified system, and the teacher can guide them, and you get real-time feedback for the teachers. So it's as good or better than a real-life classroom, funnily enough, for literacy and maths. It's obviously not very good for gross motor skills and fine motor skills, and those need to be supplemented at home, typically with offline activities.
How concerned are you and your parents about screen time?
So the parents are not, some parents expressed a lot of concern initially, but I think as time went by, and parents are very used to Zoom and having their kids talk to family over Zoom and things like that. So there is a difference, and studies have shown this. There's a difference between passive screen time, i.e. a child watching TV or watching an animated cartoon or something, and interactive screen time when they have a person on the other side talking to them, like I'm talking to you right now, because that's more akin to sort of normal behavior. And so that sort of screen time is actually okay, according to research, or at least not detrimental. But again, more work needs to be done on that. We haven't noticed anything in terms of anything negative in the children, and the parents have gotten more used to it, and they're actually appreciating it a lot more.
Terrific. My next question is for Victoria. Victoria, you are unique in many ways, and unique also in the sense that you have not only window into your own markets in Canada, but certainly a lot into the US. And also with your partners in Europe, you have a broader perspective and you see a lot that's going on in various parts of Europe in particular. What have you seen that is interesting to note? What is different that we find between the different markets from your standpoint, and how does that what might be key learnings you've taken from other markets or vice versa that you might want to consider highlighting here for the audience?
Yeah, no, thanks, Zack. It's interesting in the childcare early education space that there's so much similarity everywhere. And as we started looking around France and in the group in the UK, obviously spent a lot of time in childcare in the US. Everything is pretty much the same. When I say that, people will say to us constantly, how can you think you can operate childcare outside of Canada? I've been in the childcare space for 35 years in Canada, and people from all over the world think that maybe we're different, but definitely, as I say, similar. What I think has been highlighted during this time, you brought it up very clearly in your earlier presentation, is just the lack of support from the U.S. government. We've had a little bit of support, minor in Chicago, nothing in anywhere else, and no ability to even access. So some of the things, if you were a US-based company, you might be able to access some of the loans or, the PPP is what it's called, but nothing more available to access. So that's been an interesting thing to just understand in terms of go forward. And what I would say is a takeaway for me is we're going to expand much more in Canada than in the US on a go forward basis. So that's a pretty far reaching decision for us as a group to make, because obviously the reason that we were in Chicago and Boston was we were starting to do some aggressive US expansion. And we had 4 to 5 smallish deals that we have put on pause. We're all going to sort of close this year, 2020. What will happen next year with them, I don't know, but it's been a disappointment to see. And I know some parts of Europe have had more funding. Obviously, France has had a lot more funding than other parts. So I think, for all of us, in terms of our growth, it'll be interesting because, no one thought that we would have the pandemic. I was talking to my landlords, in March, telling them we'd be back up in action May 1st. And obviously, sorely mistaken in terms of the time and the delay and everything.
Terrific, Victoria, thanks for that. Rudy, a question for you in terms of what's next. What are some of your, maybe you can highlight some of your key near-term initiatives in certain geographies, especially outside of the UK?
So in India, we've had early traction on Kido Home, which is a virtual preschool, as well as Kido Village, which is the micro preschool from home. So we're going to continue to expand on that. We are selling franchises across the world. So, we have a big pipeline in India. We have a pipeline in the US. We are opening franchise schools in China and in Canada next year. So those are all in the pipeline. And Kido Home is the virtual preschool is a big focus for us in India, in the United States, and across the Middle East to begin with. And Kido Village, which is a micro preschool concept, we hope to take that to the US later part of next year.
Terrific. I think we'll do our last question with you, Victoria. And I've known you for a long time. You're passionate about the sector. You've built something from scratch. It's so special that what you've done. What are you seeing in parents now, for example, with infants versus parents 10, 20 years ago? What are things that are most important to them as they think of you and how you're serving your customers?
Yeah, no, thank you. Well, things have changed so much, right? From, I don't know if it's culture, demographic perspective. We didn't, 20 years ago, we didn't really even almost didn't have infant childcare in Canada. And we had limited maternity leave. It wasn't a thing to take your children to childcare. You had a babysitter or next door neighbor, maybe a nanny. And now we have a 18-month mat leave. So many children are home until they're 18 months old. And so again, that's a huge switch. And with us, to be honest with you, it's a big adjustment for families to come into childcare after they've been home with their moms for 18 months. parents, as you know, are typically older, more experienced in the workforce, and having a harder time adjusting with leaving their children. So there has been a number of big switches, and what we've done to sort of combat it is we have like a mat leave childcare program. So, your key takeaway from your slide deck, which was, flexibility, that's been our mantra from day one at Kids and Company. We're 20 years old, is that we offer, extreme flexibility for families. So we will say to families when they have their first baby and they are at home for that 1 year, 18 months, bring your children in up to 20 times at a very low cost to visit us. And they just come in on a drop-in basis, on a casual basis. And of course, the reason for that is to get the families used to coming to us, to give the mom a break from their children, some mental health time to get their hair cut, whatever they need to do, and cements the relationship with us and the family so that they're going to come to us, from the time they're 18 months until they go off to preschool when they're 4 or 5, or to early, kindergarten. And so that's been it's a mat leave package program we have, and that's been something we created to kind of try to solve a lot of those problems that were apparently becoming much bigger than 20 years ago.
Terrific. Victoria, thank you for that. Rudy, also thank you for your time. This has been lovely to see you all. Henry's here, and he'll transition us to our last panel.
Thank you. Thank you for having me.
Thank you all for that. I think some really interesting themes coming out of that. Childcare may have similarities across borders, but equally the reactions of government can be very, very different, even if it's across the Canadian and the US border. And I think technology was the other big theme there. So it gives me enormous pleasure to welcome Dave Goldberg and Matt Lee, not least because Dave Goldberg is the CEO of one of the largest providers in the US with over 200 settings. So it'll be interesting to hear his perspective operating in a market which Victoria has decided to strategically pivot away from. So on that, Matt, over to you.
Thanks, Henry. So my name is Matthew Lee. I'm a managing director at Lincoln International. I sit in the London office. I lead our efforts on healthcare in the UK and also in Europe, but through various touch points and relationships, I also get involved with the nursery space and the early childcare space, and work very closely with Zack, bringing his expertise to bear. So as Zack mentioned, Lincoln International is a global investment bank, and we work collegiately across the globe and bring the best of sector to all of our mandates and relationships. I think we've got about 15 minutes. We haven't got any slides, unlike the others, so you'll be listening to Dave and me speaking, or more me asking Dave some questions. So please do send in questions as you listen to us. But without further ado, I've got great pleasure in introducing Dave Goldberg, who is the CEO of Cadence Education, which, as Henry mentioned, is one of the largest early education platforms in the US. So Dave, do you just want to give yourself an intro and your group an intro?
Sure, thank you. Yeah, hi everybody. We at Cadence Education, as I said, we are one of the largest providers in the US. We have 240 schools across 26 states. We've built the business very much by acquisition, where over the last 5 years or so, we've been the most active acquirer in the US market.
Great. Thanks very much, Dave. So I'll kick off with a couple of questions. Now, clearly, you've had a recent deal, very successful deal with Apax Partners back in February, just ahead of COVID, entering into our sort of knowledge space and our lives. Significant transaction. Clearly, Apax thought that your business was a special business and in an interesting market. What do you see as Cadence's USPs? And the follow-on to that would be, how are investors looking at the nursery or early childcare sector, and why are they seeing it as so attractive?
Sure. Well, I think Apax acquired us because they thought we were one of the, if not the premier childcare provider in the US. We have, as I would say, an interesting trifecta. We have, generally higher prices in our markets. We have very high occupancy compared to many of our competitors, and we have very high customer satisfaction, among the highest in the industry. And that's very hard to pull off. We are very proud of our customer satisfaction, and as a matter of fact, I'll do a little bit of a shameless plug here. This has been really one of the most fascinating and most heartwarming things of the pandemic for us, is that we recently completed our biannual customer satisfaction survey of our parents. And during the pandemic, when you think it would be very hard to get high marks from parents, our customer satisfaction is not only at its highest point ever for the company, but we saw over a 20% improvement in customer satisfaction, which demonstrates to me that parents have not only, as they normally do, very much appreciate the great care and education and nurturing environment we provide, but they've been particularly impressed with our abilities to both maintain a healthy school for their children and continue to delivering on that education and that care and that fun environment for children during all this difficult time. And so we've been just thrilled by I've been thrilled by our team and so proud of them, and thrilled by the response we've gotten from parents on really how well we've done. And I think that's, to answer your question, that's what's really differentiated us, is our customer satisfaction. One other thing I'd mention is the market in the US is obviously very fragmented. And so while we do compete against some of the larger players in the market, and they're very good and very strong also, most of our competition is small mom and pop operators. And they just simply don't have the resources we have to provide, to invest in a facility, to invest in curriculum, to invest in marketing, to invest in recruiting and labor and benefits. And that makes it very hard for them to compete against us. And I think very much differentiates our schools from most of our competitors.
Okay, great. And in terms of going back to, the transaction, obviously there would have been an information memorandum. You would have been talking about trends at that point. What were the trends you were seeing and talking about in your sales document that you saw as changing as sort of going forward, and how have those changed as a result of COVID, and how are you reacting?
So COVID's obviously had a very short-term impact on the business. Most trends have gone the wrong way over the last 9 months, which I'm sure doesn't surprise anybody. I think some of the bigger trends we see, I believe, are going to accelerate because of COVID. There's, as I like to say to our team, always look for the silver linings, and many bad things, if not most bad things, have some positives to them, some silver linings. For us, I think in the US, there's been a continuing trend towards understanding the importance of early childhood education for children. That's when children's brains develop, the social and emotional component, just the importance of having children in an organized, professional, educational environment before they enter, elementary school is critically important. That has become better and better understood by parents over time, and government over time, based on a lot of the research that's been done. I think the pandemic made it so crystal clear to everybody. Not only is childcare and early childhood education critical to the economy, which I think people didn't quite understand, but it's also critical to children. And I think there's two sides of the same coin. The importance of early childhood education has really, the understanding of the importance of early childhood education has accelerated a great deal during the pandemic. And so when this is over, the pandemic's over, and COVID's behind us, I think the industry is going to see some benefits from that, in terms of both parents who want to enroll their children because they see how good it is for children, and from governments who want to make some investment in early childhood education to help their citizens and to help the economy.
And And as we think about COVID, what are the lasting impacts on the business model going forward? You know, be it technology, be it, you know, flexibility that some of our other panelists have talked about. How do you see, you know, how are you going to adapt in the new the new world? What's the new norm and how are you adapting?
Yeah, you know, we provide an in-person service. You know, the use of technology is not a huge part of what we do, and I don't believe you can replace, you know, in-person childcare for 2 and 3 and 4-year-olds with Zoom meetings. This is not what we do, and that's not what we're going to do. You know, I think as I mentioned, I think the long-term impacts are, number one, just the understanding of the importance of the business, and number two, I think there's going to be probably an acceleration of consolidation in the industry for a couple of reasons. There's many mom and pops who have owners or small individual owner operators who are not going to be able to, don't have the financial wherewithal to really get through this. And even if they do have the financial wherewithal to get through this, many that we encounter who sell their schools to us have been in the business 20, even 30 years and are, you know, at the point where they're close to retirement. I think that group of operators in the business are going to be hesitant to just go and start a rebuilding process if they can get through this. And so I think we'll see many of them, some of them just closing their doors because it's just too hard to get through COVID, and those children and those teachers will need to find, you know, other schools. And we'll see an increase in acquisition opportunities as some mom and pop and individual owner operators just say, you know, now's probably the right time for me to get out, even though I might not make as much as I would have if I had sold before the pandemic. It's really just, it's time for me to not have to sort of rebuild my business.
And so what are the priorities for you over the next, you know, the medium term, next 2 years? Is it M&A? Is it a mixture of other things? Yeah, you talked about a silver lining. Wherever there's adversity, there's always an opportunity. What do you see the next 2 years as your strategic focus?
Well, the immediate opportunity is continue to get the company sort of through this tough time. And, you know, we remain so heavily focused on sort of health and safety protocols, and, you know, our focus isn't going to move off of that, you know, until we get the viruses a little bit more under control. When that happens, I think, you know, our business model, like I mentioned in the opening, has been very much acquisition focused. We work very hard to maintain our high quality, to grow our enrollment in our business organically, and to find good schools to acquire. I don't think that's going to change after the pandemic. Our focus will be the same. I think we're going to have an opportunity to accelerate our enrollment growth organically, and you know, especially as we see some closures of other childcare, and as we see parents who have, as I mentioned, really reacted well to our efforts during the pandemic. So I think that'll help our organic enrollment growth. And like I mentioned, you know, we're going to continue to focus on acquisitions. We're going to continue to find high quality schools to bring into our portfolio and help them to thrive.
Great. And as you talk about M&A, obviously there's a number of groups out there, including on this call, who have taken their businesses internationally. You know, there's been a couple of questions raised around you know, the pros and cons of international, and, you know, does international M&A form part of your, you know, medium or longer term picture, or is the opportunity in the US so great that it's sort of a focus on the US for now?
Yeah, it's a good question. We have not been focused internationally because there's been so much opportunity for us in the US. You know, and we know the market, and we know the players, and we know the brokers, and, you know, we're very good at it, and that's where our team members are. Having said that, you know, I think over the long term, there certainly could be some opportunities international. It's interesting to think as we grow, that we can bring some of what we've learned and some of what we provide to children in the US to other countries. I like to believe that we're very, very good at what we do. And it's an exciting thing to think about moving it to other countries, but I don't think that's in our short or medium term plans. I think that's in a little bit of our longer term plans for the exact reason you mentioned. There's so many opportunities domestically for us.
Yeah, great. And just sort of slightly pivoting back to sort of organic and sort of reflecting, there's a couple of questions come in. You talked about customer satisfaction, parent satisfaction as a key driver of success. Obviously, if you make the customers or the parents happy, then the results look after themselves. Do you use NPS scores, and if so, what do you think is a good number, and what's a bad number if you use them?
We do use the NPS methodology. From what we've seen in the industry, for a portfolio company, sort of a blended score in the 50s is very good. We have many schools that are well north of that. Our most recent survey, we were in the 70s, and that was a huge accomplishment. They say in sort of world-class companies for NPS the scores are in the 70s. I think this industry is pretty much like that, and we're proud to have landed there recently. We hope we can maintain that after the pandemic, but we push all our schools to be as high as they can be. We take the survey very, very seriously. We read every comment. We take them to heart. The schools create action plans related to those comments. When parents want to be contacted, it's an anonymous survey unless they request to be contacted. When they request to be contacted, we talk to every parent. So it's something that we take very seriously. I always say we have our directors conference every year, and every single director knows what their score is, and those who have very high scores take great pride in that.
Yeah, and quite rightly. And looking at one of the other things, the trends you talked about was education, the increasing education. People talk about edification of nursery care. How do you see the trend towards increasing the education content in your early education schools versus sort of the old model of care? In nurseries, how do you see that trend developing?
Yeah, the industry, gets back to your question about sort of what are the trends in the industry, and the trend that's going to be accelerated perhaps most of all through COVID is one of early childhood education, right? The industry over the last 20 years has made great strides away from what we refer to as custodial daycare towards an education model. That's critically important. I think parents are more and more going to demand a curriculum-based, educationally focused care for their children. That's not one certainly that has children in a traditional sort of elementary or middle school or high school classroom setting, quiet, raising a hand. That's not how we do it. Children learn by doing, they learn by having fun, and they're children. They should be having fun. So we have blended we have very much focused our curriculum on many, many fun activities and taken the additional step of measuring educational outcomes. So we do a kindergarten readiness assessment, which I think is very important. I think the industry and us needs to get even more thoughtful about how we measure educational outcomes at even younger ages. But I think that's going to be a continuing trend in the industry, is to focus much, much more on curriculum-based, organized, professional, educationally focused childcare as opposed to custodial daycare. And providers like us will be challenged to demonstrate to parents that we are providing that education and have the outcomes to prove it.
Yeah, no, that makes sense. And I guess I've probably got time for one last question. As we're on the COVID topic, and there's been a lot of numbers of occupancy thrown around in terms of greater support in certain countries, perhaps less support in the US. How are you seeing the recovery of occupancy, both in your business and the sector, for 2021, and how bullish are you around that resilience rebound?
So I'm recently I've become much more confident over what that recovery is going to look like. We were the industry, as you read vaccine, news on vaccines and distribution, I believe the industry will be getting back to normal in the fourth quarter of calendar year 2021. I think it's going to take the next 6 months or so, 6 to 9 months to really get the vaccine out there, get everybody comfortable, get the world sort of back to normal. And then after that, sort of in the fourth quarter, the back to school that we will see starting in August, September, I think we'll start to see occupancy levels rebounding during the quarter to prior year levels. The main thing is, and I struggle to understand why governments struggle to understand this, that the economy doesn't come back until the virus is under control. You don't get to wish the economy back. And so,
unless you're Donald Trump.
Well, I'll stay away from the politics of it to say that it's important to get the virus under control, because the economy's right. You don't get to wish it back. You don't get to just say we're open for business and everybody get back there. The customers, the parents, they're going to decide. And it's clear that they've decided they're not going to be fully back until this virus is under control. And so we're encouraged with the vaccine. We're very encouraged by the vaccine news, and think that will help the world get back under control, get the virus under control and the world back to normal, sort of in the next 6 to 9 months.
Yeah, no, I think we're all on the same page there in terms of the vaccine and looking for the recovery. I've got a couple of new questions that have come in, and Henry's given me the opportunity to ask them to you, so I will. In terms of the mom and pop acquisitions that you're doing in the US, how do you see? I mean, where are the multiples? If you can comment on that, because I think a number of people in the on this side are quite interested in.
Yeah, we've historically been able to acquire in the 4 to 5 times, 4 to 5, maybe for bigger, sort of better acquisitions, 4 to 6 times EBITDA range.
Yeah. And are those sort of LTMs or heavily pro forma type things?
Yeah, they're typically LTMs. Going forward, the multiples have been expanding in the industry for quite a while. In many industries, the multiples have been expanding. It's hard for me to imagine coming out of this that we're going to continue to see multiples expanding. I would expect multiples to start coming down a little bit, especially as more sellers enter the market. But we'll see. It's been fairly consistent. In the last 5 years that I've been doing this, it's been fairly consistent.
And what's the average profit and revenues of a nursery in the US? They're obviously going to be bigger than in the UK and Europe. Is there a sort of I know it's how long is a piece of string? Yeah,
it's I don't have enough experience in the UK and Europe to
it's more where you are. Yeah.
To compare them. We see we see in I don't want to talk about our company and what the acquisitions we do. We see a very wide range, which probably doesn't surprise anybody with so many individual owner operators out there who have different locations, different types of building, different skills in running their business. We see a very, very wide range of profitability based on the size of the location, the size of the school, how well they operate their staffing model, et cetera.
No. Okay, appreciate it. It's a varying picture, and I think one last question that's been asked before I hand back to Henry. You talk about the increasing focus on education. How do you measure outcomes?
So there are a number of sort of well-known and well-regarded called kindergarten readiness assessments out there on the market. So we've used those. I think for other ages, it's been more of a challenge, and that's why I mentioned the industry needs to probably get a little bit better at finding ways to measure outcomes at other ages. But there's some really good off-the-shelf kindergarten readiness assessments you can use to measure outcomes.
Mm-hmm. Okay, great. Well, Dave, that's been really great to have you with us, giving us some really good insights into your view on the market in the US. So with that, I'll say thank you, and I'll hand back to Henry.
Great, thank you both very much. I took some comfort from the fact that Dave was talking about the silver lining of what we've been through, namely that actually I think people are valuing childcare and early education much more, and actually valuing the people who are delivering it, which was demonstrated through some of your customer satisfaction scores.
Absolutely.
So that is clearly excellent for the sector anywhere in the world, and really good to hear those comments from you, Dave. And some other themes around technology, the bounce back, hopefully in the next 6 to 9 months. And I think that's a really good place to leave this webinar. We've covered a lot of topics. It just leaves me to say thank you very much to all of you for joining. Thank you to our partners, Cairneagle and Lincoln International. The webinar will be available on demand on LaingBuissonEvents.com, as will the slides. And we look forward to seeing you hopefully at some point in person and in more normal environment. But for the time being, thank you to all the panelists. That was really excellent. We've covered every geography and every topic, but we've hopefully scratched the surface, but also raised some really interesting themes. Thank you all very much.